So I think we can start now. If you can hear me, let me know in the comment section if you can hear me well. If you can hear me well, I feel like there is an echo. So okay, what about now? I think I fixed that issue. Right now, perfect. So I want us to do top-down analysis for the GU and EU and USDCAD, and then we'll see whether we'll do USDJPY. What you are seeing on your screen is GBPUSD. This is GBPUSD. So what I'll do, I'll clear everything except this my indicator here, and then we can start trading. I don't know who among us does swing trading. Nani anafuata hapa anafanya swing trading? Okay, looks like there's no one. So I will concentrate more on day trading, all day traders. So the first thing we do is to go to the monthly time frame, so that we understand what is the overall trade. This is GBPUSD. So how I understand the market, I don't use the body and the wicks, I use the line chart. So if I use my line chart, there's something you can see. Those who do trade line, you can see that monthly we are bearish. Monthly we are bearish. This was an inducement, just like this one was an inducement, but we are selling from the optimal place. We should be selling monthly. We are selling from the optimal place. We should be selling monthly. So that's all I need to know, that we are selling the market, and this is the highest the market could have come. And so what I'm expecting is only sales now. You see this order block here. This is the order block that mitigated this order block. So all the money was in this order block, and that is why you see that is where we are selling from. So that is our monthly bias. It is bearish. So can we go to the weekly now? We will still talk about mitigation. Actually, when you come to the monthly time frame, I want you to look at this, because this is what we also call order flow. Okay, so this is the order block that caused the sale. This order block here, the green candle before this move. Now if you can look at this mitigated this order block. So there is no way we expect the market to come to this order block unless it wants to change character. So money left from this order block to this order block here, okay, to this order block here. So money is no longer on this order block, money is now on this order block. Now I want you to see something. This is the order block I'm talking about. This one, you see this red candle here. Though now I'm teaching something else that I shouldn't be teaching, but it's okay. This week mitigated this order block. So money left this order block and came to this week. That week there. Can you see this? So money left the order block and came to this week. Okay. Now look at this. This week, if you use the gun box, like that, because a week should be mitigated twice. First at the base and second at the 50%. So this week was mitigated at the base and at 50%. Which candle mitigated that? It is this candle. Let me delete this. This candle, this green candle here. This is the one that mitigated that week. So money left from this week to this week. Now if you use your gun box here, to check, you will see that first this week was mitigated at the base. And this is how you trade weeks. Once you spot a week, for example, this is a sell, you buy or you sell at the 0% and your stop loss at 50%. If you've done your analysis well, you will never be taken out. Never. It will never happen. So this week has been mitigated at the base. So, and this is the move that caused all this sell. So what were we expecting? We were expecting that the market, when it comes up, it will now mitigate the 50%. Look at that accuracy. Look at that accuracy. So this order block here, or this move here, mitigated what? The 50% of that week. That means we don't have any other business going up unless the market wants to change character. We have no other business for this market to go up because everything has been mitigated. Everything has been mitigated. So that is how you understand mitigation. The easiest way to understand mitigation. Okay? So, having said that, we now move to, so we know that this is the highest the market will come. If the market comes beyond this one, we're now looking at change of character, which I don't think it will happen. Okay? So, monthly, the market is bearish. Monthly is equal to bearish. So we need to know what is happening in the weekly time frame. What do we have in the weekly time frame? So we move to the weekly time frame. We move to the weekly time frame. So one thing you need to know, okay, let me just for the sake of understanding, let me mark this one. This is our monthly POI. That one, like that. Okay, I can mark that one like that now. That is our monthly POI. So that when I go to now the weekly, you'll be able to understand where I'm coming from. So we go to the weekly time frame. Now look at this. We know that there is no way the market can go above this point. There is no way. But I want you to look at this. Can you see this week here? This is the week that mitigated the order block that was here. The order block that caused this sell. But before we go to that, I want you to look at something. I want you to look at something. This is the weekly time frame now. The weekly time frame. So the market buys or sells from 2 points. Let me use the line chart. First, it buys or sells from a breaker block. From a breaker block. Okay, that one. And then the market buys or sells from what? From a QML level. Those in my class, I know you understand this, but let me explain it. The market now, let me use the, you see this one, this is where the market broke structure. This is where the market broke structure. That means this was our support. It now becomes our what? Our resistance. This was our support. It now becomes our resistance. So if you take this order block here, like that, can you see that when the market got there, it sold a bit? And it's not a bit because this is like that is like 1,352 pips. Just from what? Just from the breaker block. Just from the breaker block. And then the market, the ultimate sell comes from the QML level. This is what some other people call head and shoulder. Head and shoulder. So where is our QML level? This is where we have our QML level. And if you check, you can see that we also have another breaker block here. And this is where the market bought from. This sell is coming from this area here. So that means from where the market is, we don't have any other business of this market going up. Okay, so even weekly, so we can see, let me show you something. Let me show you something. Now we have a break of market structure here. We have a BOS here. Why do we have this BOS? We have this BOS. This is GBPUSD. We have this BOS because the market was coming towards our zone here. The market was coming towards our zone. And the market has already touched our zone. Now I want you to look at something. This is liquidity here. This one. And immediately the market took out that liquidity. It has no business going up. This was, from where I see and from where I sit, this was the last liquidity are going upwards. So the market took out liquidity and it has now no business. It now, the only business it has is to sell. So look at this. The market came, took out liquidity there, and then I want you to look at this. So we were printing something like this: higher high, higher low, higher high here, higher low, higher high. So when the market got here, it was unable to print another higher high. So what did the market do? It broke structure, or it changed character here. Okay, so if you look at this, this one, this is now a change of character. Okay, this is a change of character. What does that tell you? That tells you that in the weekly time frame we are doing what? We are selling. So I'm sure you guys are following me. This is a step by step top down analysis. So in the weekly time frame we are selling. Why are we selling? Because the market has changed character. It has taken the previous low. The market has taken the previous low. So we are supposed to be selling. So the question you need to ask yourself is, where are we selling from? Where are we selling from? Now if you look at this place here, we don't have any valid order block here. We don't have any valid order block, so we cannot start trading from here. We need to go to the lower time frame and check which order block did this one retest to, and what is our next course of action. So what do? You come to the daily time frame. You come to the daily time frame. Now I want you to look at this. Look at what is happening here. Let me remove these other ones. Are you able to see that? Now we said, those of us that have been following my classes, an order block must answer 3 questions. An order block must answer 3 questions. So if you are from my class, can you tell us what are the three questions that an order block must answer? What are the 3 questions that an order block must answer? Are we here? Watu wa klasi yangu mnaniangusha. People from my class, you are following me. You are following me. You are following me. Why are you following me? Yes, liquidity. So the first thing we need to look at, has the market swept liquidity? I want you to look at this. Let me move this a bit so that you can see. Can you see this one here? This is liquidity that has been swept. That is liquidity that has been swept. The second thing is that an order block must have an FVG. FVG. I want you to look at this from this point to this point. This is FVG. Okay, that one is FVG. That is FVG. Okay, and then we said that it has to break structure. The market will have to break structure. If you want to see a BOS, mostly don't use the wicks, use the line chart. Okay, can you see what is here? This is a break of market structure. This is the market of, this is the break of market structure, and this is what caused this change of character. Okay, so that tells you that this our order block is 100% usable. So when the market broke structure, there is one thing we know, that after every break of market structure, a new trading range is formed. That means we have a new trading range here, from that to here. Okay, from there, this is the daily time frame, from there to there. So we expect that when the market comes, I want you to look at this. We said if the market breaks structure, retraces, breaks structure again, this high is always liquidity and it will be taken out. That one, it is always liquidity and it will be taken out. That means when looking for our POI, we cannot look for a POI below the liquidity. We cannot look for a POI below this liquidity, because this liquidity must and will be taken out. And if you take your order from this liquidity, you now become what? You now become the liquidity. We said if you cannot spot liquidity, it means you are the liquidity. If you cannot spot liquidity, you are the liquidity. It is as simple as that. I see my people on YouTube. Thank you. Thank you. So if you cannot spot liquidity, you are the liquidity. So look at this. Someone will come and mark this as their order block. People who do not understand the market, you will come, mark that as your order block. Okay? And then you will come and do what? And sell the market from here. Where do you put your stop loss? Above the order block. That is what most people trade. Where do you put your take profit? The swing low there. Okay, so the market will come and then activate your order here, and maybe you are not taken out because your stop loss was above the order block, and then you will start to swim with the market and then start to thank your gods that the market is giving you some money, but only for the market to reverse on you, because this is an inducement. This is an inducement. This one, this is an inducement. So the market will come and then you will see as if you are making some money, and then the market will take you out, because it has to go and get a POI from a valid POI, and the POI must be above the liquidity. Now let me show you another way the market makers will eat your money. They will eat your money like that. This. So someone will come and say, okay, I have been taken out, but now the market has changed what? Has changed character. And so someone will mark this as change of character. And then they will say, okay, because the market is going up, the market must come down, take a POI, and then move above. Are we following, please? So you will come here and check, okay, what is here? What can I use? What can I use? There is a order block here. You can use that. But if you are a pro trader, you will see this breaker block here. Okay, remember, we don't know what is happening here. This is where we are now. The market has broken structure. So you want the market to come down, activate your order, and move up. So what will the market do? You will come here and put your order there. Where is your stop loss? Below. And now I hope you understand that this will happen in all time frames, not only in the daily time frame, in all time frames, from monthly to 1 minute. even 1 second, it will happen. So you will come and take your order there, and then where will be your target? The last swing high. The market will come, because the market makers, they are not stupid. They know that you have orders here. So they will come, activate your order and start moving up. And then you thank your gods and say, I'm a very good trader. But what will happen? The market will come, reverse on you, and continue with the trade. Continue with the trade. So that is how many people lose twice in one trade. You lose twice in one trade. Okay, so we can see that the market took out the FVG, and then it came to our order block, and then we are selling. That means we don't have any reason to do what? To be looking for large buys. But I want you to see something. I want you to see something here, because this is daily. So in the daily time frame, we are selling. We are selling because there was a break of market structure here, or what we can call a change of character. Can you see that one here? We have that one there. So that means the market is doing what? The market is selling. But I want you to see this, especially those who are in my class. You will understand this. This is what was happening. We were making a series of higher highs, higher lows, higher highs, higher lows. Let me take this low. Then higher high. So we came here. Can you see? We came here. Okay, let me make this even clearer. Let me make this clearer. Let me start from here. This is the higher low, higher high, higher low, higher high, higher low, higher high. So when we got here, the market did not make another higher high. So what did we do? The market broke structure. Can you see this one? The last swing low. The market broke structure, retraced, broke structure again. Now if you are my student, you know that this one is liquidity, and there is no way the market will make any major move until this liquidity has been taken out. Taken out, like taken out completely. So that will tell you that we now have a trading range. We have a trading range in our daily time frame. What is the trading range? You take your gun box. The trading range is from that high to this low here. That is our current trading range. So someone would ask me, but the market broke structure here. Why are you not taking this as a trading range? Because after every break of market structure, the market does what? The market creates a new trading range. The reason I cannot do that is because this market sold from where? From an inducement. So that means these highs will be taken out. These highs here, those highs must be taken out. So that means I cannot look for any major move until these highs have been taken out, because and you can see these are like relative equal highs. Relative equal highs. Number two, I want to look at this, because this is our order block here. This is the order block maybe someone used there. But I want you to tell me, did this order block take any liquidity? No. It has FVGs and it broke structure. But if an order block lacks one of the three questions that we said an order block must answer, my advice to you is keep away from that order block. Keep away from that order block. It will rubber you. Keep away from it. This is GBPUSD. So what we are saying is that these highs must be taken out before we get an ultimate move, because this is what someone will do. You will come and take a trade from this order block here. Let me draw the order block for you. So these are people who do not understand the market. You will come, take your order there, and where do you put your stop loss? Probably above the order block. Where do you target? You target this high, this low, sorry. That will be your target, without knowing that you will be taken out eventually. So the market will look like it's giving you money. It will come from a POI, this one, you can see another block here. It will come to an POI and then come take you out, because it has to sell from a premium price. The market has to sell from a premium price. And you can see all the sales that are happening here. This sale, okay, because this is the only one that has happened. The market came, tapped from the equilibrium. Tapped from an equilibrium, and then what is it doing? It is selling. If you know how to trade and you look at the left here, you don't have any reason why this market is selling. But the market is selling to induce you, to tell you that we are now in a downtrend and you need to come and go with us. That is how market makers do. So, having said that, we need to look for an order block above this what? Above this the inducement here. So I'm seeing two things. I can see this FVG. Can you see that FVG? I can see that FVG, and then our order block here is intact. No, sorry. So the only thing I am seeing here is this FVG, because we don't have any other valid order block above the FVG, because this is not an order block. Remember, this is what is that is supposed to be an order block, and an order block must protect both sides, both the left and the right. This one, it did not protect its left. So this means that the only order block I can see here is which one? Is this FVG. So I cannot look for any major sell until this FVG, or until the market comes and buys or sells from this FVG. Why? Because the market selling from this FVG is one selling in our premium area, and then it is above the liquidity. It is above the liquidity. That means this will be my daily POI. Sorry. My daily POI. So I'll be expecting that when the market comes here, what do? I can look for a major sell. I can look for a major sell. Now, having said that, we know that this market will not do any major sell until it comes here. It will not do any major sell. So, this tells you something. This tells you something. From where we are right now, what should be the daily time frame be doing? Because we are expecting that this market retraces, then it does what? It comes down. So we need to now check this. Though the daily time frame is selling, the daily time frame is also retracing, and this means buying. I hope you are not confused. So the overall market structure is that we are supposed to be selling, but this market needs to go to a premium price before we get the major sell. So what does this tell you? This tells you that from Monday, you should be looking for opportunities to buy. From Monday, you should be looking for opportunities to buy, and we are buying towards that area. We are buying towards that area. So any sell you are taking should be a small sell. It should be a few pips sell. Any sell you are taking, that is in the daily time frame. In the daily time frame. So we move from there, and then we go to the 4 hours. We go to the 4 hours. Now look at this. I think I can remove that one. So we are here. We said we are expecting that this market will come to our POI over here. I could have shown you how to refine POIs, but for the sake of my peace, allow me not to do that today. Yes, allow me not to do that today. But this is where we expect our market to come. The easiest way is if the market comes here like that, and then it breaks structure in your zone, you can now start looking for sales. That's one of the easiest ways to get a POI in a lower time frame, because now you cannot risk this is how many pips? 56 pips. You cannot take a trade and risk 59 pips, 56 pips. Okay, so here we are. So we are expecting that this market must do what? Must come to our POI here. But now let us look at what is happening at the market currently where we are. No, can you look at this move from here to here? If you look at that move, you will see that the market broke structure here. Now this is 4 hours. I don't want you to be lost. Just follow me closely. The market broke structure there. So what did we say? After every break of market structure, a new trading range is formed. Now I hope you know, trading range is from monthly, weekly, daily, 4 hours, 3 hours. We will go like that until 5 minutes, so that we get an entry. So that we get an entry for tomorrow. So in the 4 hours, then this becomes our trading range, from that high to this low. From that high to this low. So from where we are, what are we expecting? Because this is the premium price, or the premium area. That is the premium area. What should we be expecting? I'm not continuing until you give me an answer. Someone from TikTok or YouTube. We are in the premium area. What should we be doing in the premium area? What are we supposed to do in the premium area? Premium area, a sell. Thank you, rich kid. So if we are in a premium area, we are supposed to sell. Now you need to identify what this sell is. This sell is a retracement to a POI that will lead us to a buy to this area. Okay, because we are in the premium area, so we expect this sell to come to a POI that we will look at. We will try to find now, and then continue to buy. Okay, so in our 4 hours, let us try to look for what? Let us try to look for POI. So we have this breaker block here. Can you see this one here? We have that breaker block. And this, now the market, once it gets here, this area, it will have a small retracement. So the market comes and then gets to this area, it will do something like this. Then it has to buy from this area. And then we move up. So if I will be looking for, let's say I'm looking for sales tomorrow I look for sales, and then I manage to get an order block here, my first take profit will be around this area, because this is where we have this one, a breaker block. Okay, it is in that area. And so what you can do, you can refine it to the body there. And so what can you see? You can see liquidity here. This is liquidity, and you can see liquidity here. So that means when the market gets to that area, it will have a small retracement. And this is 4 hours. So a small retracement can mean even 50-60 pips. Okay? This is 4 hours. So this is a BOS. This is a BOS over there. So we want this market to retrace. Our main buy will come from here. Our main buy will come from this area. So this is our POI for a buy. Okay, this is a POI for a buy. So that means so I will leave this one here because we will need it tomorrow. So when the market comes here, you can look for a small, because this is still, if you look at our trading range, this is still the discount price, but this is where we get the inducement move here. So we'll come get an inducement move, then the people will be taken out. We get a POI here, and then we do what? We move, and then we move. Which POI? This one. This one has a liquidity sweep. Can you look at this? This is when. This is liquidity that has been swept. There. Okay. And then this was the last high, and it was taken out. And then you'll see that the market did an FVG here. So this is liquidity that was swept here on the left. If you can look at this. And this is what we call the QML. If you remove the wicks, can you see this? This is what we call the QML. This is a stop hunt. This is not a change of character. Hii inaitangwa stop hunt. A stop hunt. So the market came, bought from this place. People thought that we are now going up. It came and swept them, and now it is buying. That is why it is called a stop hunt. This one here. This is the liquidity that was swept. Can you see this? This is the liquidity that was swept here. Here. That is the liquidity that was swept. Perfect. So tomorrow, when the market comes to this area here, it will have a small retest, but this will be the main POI. Not tomorrow per se, but next week. This will be the main POI. Okay, here you see where I have the BOS. If you remove the wicks, this is where the market broke structure. Can you see here? This is where the market broke structure there. So that means there was another block here that was not respected. There is another block here that was not respected. So when the market comes back to this order block, it must do some it must react from this order block. It must react from this order block. Okay, I don't know what's happening to my mouse, Brian, just a second, I'll be back. Okay. So this is what I'm saying. This is what I am saying. If you look at this, and you can even define this to that area, there is another block here that was not respected. The order block that is not respected is what we call a breaker block. Breaker block. Okay? So if I come back, can you see this? Can you see that kind of accuracy? The accuracy. So this is the order block, because we expected that when the market comes back here, or when the market comes here, the only thing it will do is to continue to sell. But now it was taken out. This order block was taken out. So that is why we have a BOS here. A BOS, a break of market structure. What background are you talking about? Black background. Okay, you can see. Let me see whether I'll get the black background. I don't know even where I changed it. Okay. So are you able now to see? I think this one is contrasting well. I think this one is a good contrast. So now we can see better now. Perfect. This is what I am saying, You see this order block? Because this is what caused all this move down. So we expect that every time the market comes here, the market will react downwards. But this time it was taken out. So that means this is a breaker block. I'll have to use another color. This is a what? A breaker block there. Let me use white. This is the breaker block here. So this is what I am saying. When this market comes back here, okay, now I'll have stress to change these things. Because I need to change them. I need to keep changing them. When this market now comes back here, it will have a small retracement. And this retracement can even break this structure, because this will be an inducement move. So the market will come from here, come here. It can even break this structure so that it creates another inducement here. I'm showing you how market makers do. So it will look like it is creating another order block here. And so what will happen? People will want to come buy from here and then go long. But the market will come, take out these ones, come to the order block and then buy. Okay? This is what we call Quasimodo. Quasimodo. Those of us that are in my class. Quasimodo. Yeah, so we have a POI there. We have a POI there, like, yeah, like that. Like that. So this is our breaker block, or BB. That means we will get a reaction from there. So this is the 4 hour. This is the 4 hour time frame. So we need to ask ourselves now, we need to ask ourselves, what are we supposed to do tomorrow? What is it that we are supposed to do? Drawing panel. Drawing panel. Okay. Here we are. So from where we are now, we are supposed to look for a sell that we can target this liquidity over here. We can target that liquidity over there. Can you see there's liquidity here? This one, this swing low, and that swing low is in our area. It's in our area, so we know that this swing low will be taken out. So once we look for a POI here, we'll be targeting what? This swing low. So for us to get a POI here, what do? We need to go to the 3 hours. Let's see whether in 3 hours we'll get a POI. Okay. You can see that there is something here, and that order block has not been retested. Can you see that? That order block has not been retested. I'm not in UK, I'm in Kenya. Grow 120. I'm a full Kenyan boy. So this then becomes our what? Our first point of interest. And so what we are going to do with this one is to refine it, because you cannot risk these are how many pips? You cannot take a trade and risk 27 pips. You cannot risk 27 pips in a trade. So this is what I want us to refine, and this is where we will get our trade for this sell. This is where we will get our trade for this sell. Okay, so how do you refine this? Let's go to 1 hour and see what is happening. So we can refine this. Now you can see there is FVG here, but usually me, I don't trade FVG, so we refine it to that. So we are trying now to refine this so that we get an entry tomorrow. So that this is GBPUSD. GBPUSD. So let's go then to 30 minutes. And then this is important. When looking for a POI, you have to look for where the inducement is, or where the liquidity is. You see, this is already liquidity. This one, that is liquidity already. Okay, and so that liquidity must be taken out before we get a POI. That liquidity must be taken out. And then we have FVG here. There are people who trade FVG. I don't have an issue, but myself, I don't trade FVG. And this is how, in case you want to trade FVG, this is how you trade FVG. Once you spot the FVG, I don't trade FVG, but it still gives you some moves. Once you spot the fair value gap, like that, I hope you know why I am drawing here. It's because it's from this week to this week. GBPUSD, you come and take the gun box and then run it from top to bottom. The first trade will come from the base of the FVG. So that means you can come here, take a short position at the base. Where do you put your stop loss? At the 50%. Now, can you see that this is a 4.8 stop loss trade? I think that trade is manageable. That's a manageable trade. So, where could we have moved, or what could have been our target? This swing low here, because it is liquidity. That swing low over there. So if you look at this is about 36.1 pips. 36.1 pips. This is something else that will happen. The next trade will come from the 50%. 50% here. Where do you put your stop loss? At the 100%. So what will you target? There is some liquidity here, and I know there are some other liquidity that will build with this sell. You see this liquidity over here? This liquidity. If you trade like this, you will become a witch in the market. I'm telling you. So this should be a move that you expect tomorrow. And then you can even do what? You can even refine this to this breaker block here. You see there's a breaker block here. This one. And it is exactly where your 50% of the FVG is. So you can refine that even to here. And where do you refine it? To the body. You refine it to the body like that. And then there. So that means your risk to reward ratio even changes, because now that is a 2.2 stop loss. That's a 2.2 stop loss. What do you target? You target that liquidity, that swing low. That is about 36.7 pips. So you can consider this as if you want, consider this as a signal. If you want, consider that one as a signal. That one, it will happen tomorrow. I'm telling you, it will happen tomorrow. It will happen tomorrow. Tomorrow it should happen. It should happen. So you can consider that as a signal, or you can backtest with it tomorrow. You'll tell me that one will happen. That one will happen. Now there's a higher possibility, because this sell will be coming from our QML level. You see where our QML is? I'm sure the people from my class now, this one is making sense now. I'm sure this one is making sense. People who've been following my classes. So Monday, yes, sorry, it's not tomorrow. It is Monday. So this is our QML level. So if the market moves beyond this one, you know that the market will be inducing. But this is where we will get our main POI. This is our main POI. So the moment I refined it, now I'm no longer trading the FVG, I'm trading this breaker block. this breaker block here. Usiseme ni kadogo. It is not a small one. You see, this is where the market broke structure, and it is also around our QML. So this is one of the most highly probable trade. Highly probable trade. Highly probable trade. I'm telling you. Highly probable trade. And this is 30 minutes. This is 30 minutes. And you can see our stop loss is what? 2.2. That is insignificant loss. Insignificant loss. Look at the risk to reward ratio. 16.68. Now this is what we call SMC. All others, they tell you nonsense. This is what we call SMC. Because SMC is fighting the tight stop losses. Tight stop losses. So this is what we expect tomorrow. This move. And you can see this move is above what? It is above liquidity. Can you see this? It is above liquidity. So that means that is one of the most probable trade you will see tomorrow. Okay? Actually, my people in the group, if you are here, the ones that we are doing that that challenge, tomorrow we will break the first lure and we will target these pips, 36 instead of 20 pips, because it's our first trade. We target 36 pips. 36 pips. If we target that, we will be good. Because this has to come up to here. Yeah, it has to come up to there. So having said that, I think we now have a trade for tomorrow for GU. If you have 36 pips in one day and you trade with a 0.5 lot or even 0.2, you have money for that day. So from where I sit, we have money for tomorrow. And we have gotten this in the 30 minutes time frame. Actually, if we could have continued with this, our stop loss can even be 0.1. 0.1. It is possible. And it will not be taken out. I'm telling you. You see these double tops here? That is liquidity. You see this one here? This is liquidity. It has to be taken out. So tomorrow, I'm not looking for any setup until the market comes here. For tomorrow. And not tomorrow, sorry, on Monday. Forgive me if I say tomorrow. The trade is not necessarily from the FVG. I've told you myself I don't trade FVG. So I was just trying to show you how you should trade FVG. So as I was showing you, I got another block here, a breaker block. So for me, I will not say that I am trading FVG. I'll say that I am trading the breaker block. But even if you say that you are trading FVG, it's still good. It still works. It's only for me, I don't trade FVG if I don't have confluence, like what? Like the breaker block, another block, something like that. I have to see it. So I don't just trade the FVG blindly. But what you can do from your 30 minutes time frame, this is fianza, 30 minutes time frame, mark the FVG, and then take a gun box. This is our gun box here. Let me try to make it a little bit so that you can see it. You can see our gun box here. The base of the FVG has already been taken. So you look for a trade at the 50% of the FVG. the 50% of the FVG. If you want to risk a lot of pips, this will be 4.9 pips. So I think it's still manageable. So your stop loss is at the 100% of the FVG, and you have a setup for tomorrow. And this is the setup I'll be trading with my people in the group. The same setup. Actually, we had this sell limit yesterday. Those who remember, we had that setup. We had that setup yesterday. So can we now move to EU? I think we can now move to EU and see what we'll get from there. We can move to EU. Do we have anyone who has any question before we move? If you have a question, let me see in the chat box. If you have a question, let me see in the chat box about GU. If you have any question about GU. GU, I think we are good. Let's now move to the so this one does not work now. That is where we are. Let us now move to EU. They usually move almost the same. So this one, because we have done a lot, this one I'll move a little bit faster. I'll move a little bit faster. Remove the drawings. I feel like I should change this. Okay. Well, let it remain as it was. So we are here. We start with the monthly as usual. This is now EU. This is Euro USD. This is Euro USD. So what can we see in the monthly? We see that we are bearish. We are bearish because this was taken out. This was a break of market structure. This was a break of market structure. So, what is our first trading range in the EU? You take a gun box, run it from top to bottom. There. Okay. Perfect. So we run it from top to bottom. So we need to look at this place and ask ourselves, what are we supposed to be doing? From where I sit, this is the premium area. That means we are supposed to be selling. It means we are supposed to be selling. Ukiingia, please like the video, and if you can click the share button, you'll have done well. Which number is not complete? Okay, my number 17303. Let me use the, yes, like the video, please. I think my number is complete, but we can use the nini like that, 254. Yeah, like the video, follow me. You will love these classes, by the way. And also I have a WhatsApp group where I set these setups almost daily. So you can join the WhatsApp group. Let me set you something. So I've sent a link. That link will take you to my WhatsApp and also the group. So I have a WhatsApp group where I set these setups. So I have two groups. One group is absolutely free. I have classes twice a week. Absolutely free. You won't pay anything. And then I have another group where we are doing a challenge. The challenge is a prop farm challenge. I have like 10, close to 15 people now if I'm not wrong. And we want to cash out at least $300. $300 by December. So before you go to Christmas, you'll have $300. $300. That is like Kenyan money, that is like 40,000. So sitaki kusikia mtu akisema hawezi enda Mombasa December. And then I look for cars to hire for you. Okay, this is where we are. This is where we are. This is where we are. This is EU. So from where I sit, we need to know whether this is a sale. This is a sale that is happening. So we need to know where is this sale happening from. We said that the ultimate buy or sell happens at what? The QML. There. Okay. That is where we have the QML. So we get back to our candles. Now, can you see something? Because now this becomes our order block or our breaker block here. So can you see the market came to the QML, and then what is happening? The market is just selling. That means monthly we have no reason to go above this week. Monthly we have no reason to go above that week. We have no reason to go above that week. So what about weekly? What about weekly? Here we are. Here we are. Here we are. Here we are in the weekly time frame. In the weekly time frame. So we know that we are supposed to be selling the market. We are supposed to be selling the market. So we need to know whether we are in whether where we are is where we are supposed to be selling from. If you look at this, the market retraced to that area, and that is why it is selling. So from where I sit, the market still has no reason to go above this area. No reason to go above this area. But if you come here, you can see that there was a break of market structure here. This one. And this should be actually a change of character, because that tells you that we are now no longer buying, we are supposed to be selling. we are supposed to be selling. So what does that tell you? That tells you that in the weekly time frame we already have a trading range, and this is our trading range over there. So from that high to this low, because the market has broken structure. The market has broken structure. So with this, we can go to the daily time frame and see what is happening. All right, here we go. This is our daily time frame here. This is our daily time frame. Now remember, this is how we are coming, and then the market came here, broke structure, retraced, broke structure again. But now I want to be sure that the market broke structure, and you can only know that by using the line chart. Okay, so you come here and use the line chart, and so look at this. You can see that the first break of market structure was here. Can you see that? That was the first BOS. That means that if we are looking for any sell, it must be above this liquidity, here. So we go back to our line chart. So this tells you that the market came here, created a higher high, came here, because now we cannot take this as a break of market structure, broke structure here, it retraced here, then broke structure again. What does this tell you? This is liquidity. That one is liquidity. Okay, and so even though we are selling, we cannot look for optimal sales until and unless this liquidity has been taken out. Until and unless this liquidity has been taken out. And you will see that we have a QML just above that liquidity. So what do you do in the weekly time frame? This is daily, sorry. In the daily time frame, we have something here, but this does not look like a very good order block. So we need to go to the 4 hours and look for a good order block, and that order block must be above that liquidity. Okay, so what do? You go to the 4 hours. And then when you go to the 4 hours, it now becomes easier because we have an order block here. That means I don't have any issue with this now, and then we remain with this. That means we cannot be looking for any optimal sell before the market takes out this liquidity and comes to this our order block here. Order block. So this is a very good POI. Point of interest. We have a point of interest there. Okay, so that tells you that whatever that is happening here, the market is trying to look for a good place to buy so that it comes and takes this liquidity and then takes our POI. So we need to ask ourselves, what is down here that can cause the market to come down? So I can see something here. I can see this one. Can you see that? That is a breaker block. We have a BB there. And then this is where our QML level is. It is here. This is where our QML level is. So we need to look for a POI around this area, where we will have the ultimate buy. So what do we have here? We have this one here. So I'll have to change this from there to here. Okay? Because that is where we have our QML. And for us to know that it is a valid QML, you can see that there is liquidity here. This swing low. See this swing low here? This is liquidity. This is liquidity. So from that point, we go and look for a POI. We look for a sell opportunity. Okay? We look for a sell opportunity that will bring us to this order block. We look for a sell opportunity that will bring us to what? To this order block. Now, this order block has not been retested. That one. That order block has not been retested. So we have a good POI here, and this is what we will refine for us to get the sell that will come to what? That will come to this BB here. How many pips are this? 35 pips. We cannot risk 35 pips. This is Euro USD. Euro USD. Euro USD. Euro USD. And if you feel that what I am teaching you is important, you can send me a gift. Or the greatest gift is to share this live and make sure that you like the live. And then if you want to be seeing such things almost daily, you can join my group. The link is on bio. The link is on bio. The link is on bio. And then we have this challenge. We have this challenge that is coming up. We actually almost, I'll show you once I'm done. I hope I remember. I hope I remember, but a lot of people have already joined the challenge and we have bought the prop farm accounts. From Monday we start to trade. Our target is that we pass the challenge, and before Christmas at least every one of us in the group will go with $300. $300. Whether you are a pro or a beginner, it will happen. So let's go back here. This is EU. So we want to refine this entry and look for this sell. We want to look for a sell that will come here. Okay, so what do? We move to the 3 hours time frame, and we can now refine our entry. Okay, I've seen something very important. Now, who remembers, those of you that are in the group, who remember that I taught about the psychology of the week? Psychology of the week. If you did not get it then, this is the best time. This is the best time to get it. The best time to get it. Psychology of the week. Now if you look at this week here, this one mitigated our order block. Mitigation just means that it retested our order block this week here. Can you see this? This week here, it mitigated our order block. That means the money is now no longer in the order block. The money is on this week. Okay, I don't know whether you people can see what I'm saying here. You can see this week here. Who can see it? That week. There's a week here. If you see it, like the video so that I know we are together. Just like I'll know that you have seen the week. The week that I'm talking about. I can't see likes. That means maybe you are not seeing it. Perfect, perfect. Good. So what this tells you is that the money has now left the order block. The money is on this week. So what do? You refine your order block to that week. Like that. So how many pips do we have now? 10 pips. That's still an expensive trade for us. That is still an expensive trade for us. But this is what happens. Like the FVG, the wick is mitigated twice. The wick is mitigated twice. First, the wick is mitigated at the base and then at the 50%. So if you are looking for this trade, you'll come and put your order limit there. Where is your stop loss? At the 50%. That is like 5.2 pips stop loss. So for us, that is still a lot. That is still a lot. We are SMC traders. So what do? We go to the lower time frame and try to refine this entry. We try to refine this entry. So come to the 1 hour. What can you see? I told you these things are like magic. What can you see here? Can you see another block here? My God, my people are lost. You need to talk to me so that I know I'm not talking alone. Can you see another block at the base? Exactly at the base of the wick. Exactly at the wick, at the base of the wick. Perfect. I can see that you can see it. So what do? We need now to refine this entry. We need to refine this entry. We need to refine this entry. Just a second. This, oh God, no. This is where we are supposed to okay. Our PY is now here. Okay, so I can remove this. This is what we are refining now. This is what we are supposed to refine. This is what we are supposed to do. What? To refine. So we need now to go back and look at what? How do we refine this entry? And we already know that the second trade, we will get it from here. From this place here. And then where will be our stop loss? There. Okay, don't forget that. Put that in mind. So thank you. I can see you are seeing it. So we need to refine this entry so that we have some fewer pips for stop loss. So what do? Go to the 30 minutes time frame. What can you see here? I can still see our BB here. No, our order block here. Our order block is still here. Our order block is here. But now, perfect. I want you to see something else. I want you to see something else. Can you see this wick here? There is a wick here that mitigated this order block. This one. Can you see that wick? If you see that wick, that means that our entries are now supposed to change. We take a gun box, we rally it from top to bottom. And what do you see? I told you these things are like magic. What do you see? The base was mitigated. So what are we supposed to mitigate? The 50%. The 50%. Like that. So that is where the market will now come to. That is where the market will now come to. So we need to look for, this is now like how many pips now? Our expensive trade should be not more than 3 pips. This is 4.4, 4.2. We still have a long way to go. A long way to go. Let me move this a bit. A long way to go. So what I'll do, let me try to like that so that you can see what is happening. Okay, you are able to see that wick, this one, we've refined it to this wick. So we need to go to the lower time frame and look at what is happening here, because for every trade you take, you must have a reason. You must have a reason. So what do? We go to the 15 minutes time frame. 15 minutes time frame. What do you see here? My God. Can you see there is like another block here? I told you, these things are crazy. And now what you're supposed to do is that when looking for an order block like this, when looking for an order block like this, you need to refine this to the body. But I need us to do that step by step. Step by step. So that means right now our stop loss is 3.3. This trade is still expensive for us. Still expensive. So let us try to refine this. Let us try to refine this entry. So where do we go to? Go to 5 minutes. Aha, something is here. Can you see there is a breaker block here? This one. Because it was taken out. So this is a breaker block. This is a breaker block. So what do? Take your and refine this. 2.2. That is a good trade. That is a good trade. We could have even refined it further in 3 minutes and 1 minute. But a 2.2 trade is something. A 2.2 trade is something. Now remember something. Remember that this is the base of the week that we are taking this trade from. So the 50% will also be taken. The 50% will also be taken. So what do? We want to target the next obstacle. We need to target the next obstacle. Why? Because we expect that this market will still come up and take the 50% of the week. Yes, the refinement means you will miss some trades. Refinement, you will miss some trades, but then when you lose a trade, you don't lose a lot of money. In trading, you have to be willing to lose some trades. You have to be willing. You have to be willing. It must be in your blood that I can lose some trades. But even if you lose a trade, because like the people I'm having a challenge with, our target is only 20 pips per day. 20 pips per day. And then we trade with a 0.5 lot. That is $100 per day. We are not overdoing this thing. 20 pips every day. So even if we lose 5 trades, and because our risk to reward is not less than 1:10. It's not less than 1:10. Even if we lose 5 trades and win 1 trade, we are still in profit. I'm telling you, we are still in profit. This is Euro USD. Euro USD. Tanifungia hapo. Euro USD. So the what we do in trading is, don't worry, you will lose some trades, but you need to understand that once you get that right trade, it will cover for like 20 trades that you have lost. So that is the whole idea here. That is the whole idea. This is Euro USD. So we need to know where will our target be? Where will our target be? We need to look for a target. We need to look for a target, because we know that this market will still come up. So if you don't see a target, it will be crazy. Let's go to this is 15 minutes. I still can't see anything. This is 5 minutes. This is 5 minutes here. Okay, all right, okay. Because if you cannot see any clear target, you can now move with the number of pips. You can move with pips now. 1 minute. So I'm thinking in this trade, the next obstacle that I am seeing, if I don't know whether it will be taken tomorrow, is this one. That is the closest liquidity I'm seeing. Look at this. How many pips are those? 56 pips. 56 pips. 56 pips. But what I would advise, because this market will still go up, what I would advise is you can target like that one, because this is the next obstacle that the market can come and move up. This breaker block here. You see that breaker block here? That one. That's an obstacle. So if the market comes, rallies up, when it comes back to this, it can go up. So target like 31 pips from that trade. 31 pips from that trade. So I want to do something. I want us to refine now the other 50%, so that if you miss this trade, you can get the other trade. And then I'll be done for today. I will be done for today. So this is the week we are working with. This is the week we are working with. So what do? You measure like that. So the next trade we are expecting, it will come from this zone here. That is where we are expecting the next trade. So what do? We start to refine this area only. That area only. What can we see in the 1 hour? we can see there is this breaker block here, but let's see to the one what is in the 30 minutes. All right, let me show you another order flow. Can you see this wick, the green wick? Can you see this green wick here? This one. I don't know whether these things are, is there a way I can make them a little bit? No, I don't think. Thicker. But there is this wick here. Can you see that wick? Perfect, perfect. I think people can see the wick. Now, this wick, according to our order flow, this wick took out this liquidity because this is what retested our order block here. So this wick has all the money. That means this wick must be retested at the base and at 50%. Look at this. The wick has already been retested at the base, so we expect that this wick will be retested at the 50%. Like that. So that means this is how many pips? 2.8 pips. Actually, that's even a good trade already. But let me see whether we can, because we need to see another block or something here. The market will not just sell from nowhere. It has to sell from something. So what we do, we can remove our gun box and come to 15 minutes. 15 minutes. I still cannot see anything here, so we can move to 5 minutes. Do I see anything serious here? Not yet. Let's see what we have in 3 minutes. Aha. Now you can see that we are in we are at the 50% of an order block. We are at the 50% of an order block. Let's see what we have in the 1 minute. Good. Look at this precision. My God. Look at this precision. Precision. Can you see this order block? I'm telling you, if you analyze the market like this, you will feel like you are a magician. This is a 1.8 stop loss trade. And I can confidently tell you that that is a trade I'll be waiting for tomorrow. So you come here and you short here. Where is your stop loss? You can even put it at that wick. That is a 2.7 stop loss. But we do a 1.8 stop loss, 1.9. So this will be our ultimate sell. This is the one now we can move even to here, 78 pips. That one. So tell me, if you have something like this, how can't you not make money? If you have something like this. No, so this one, you are doing two things. Number one, you are protecting your capital. You are protecting your capital. I don't understand why someone would be taking a trade and then you are risking 20 pips, 50 pips. It means there's still more to do with your craft. Okay? The risk to reward ratio here is 41. So what you can do is to the other one, you can target half of this. Risk to reward ratio 17. This means that if you do 17 trades and you lose 16 trades and win one trade, you are still at break even. That is crazy risk to reward ratio. Crazy. That's crazy risk to reward ratio. Okay, and it is possible. It is very much possible. Very much possible. I want to try and very much possible. You can get these trades. You can get those trades if you want. So, having said that, I think now what is standing between you and making money on Monday is not following our steps. Just that. So you have a setup in the, we have a setup kwa GU. We have a setup here. Okay. We have a setup here. We also have a setup here. So what other pair would you like me to do a top-down analysis on? I think those two are even enough. But in case you trade any other pair, what other pair do you think we can do a top-down analysis? Top-down analysis. UJ. Okay, let's see what we have. The USDJPY. JPY is here. We'll still look at okay, the reason I'm not very comfortable with gold is because gold doesn't have any reference. But those who followed in the group, do you remember I sent this setup? Those in my group, I sent this setup. I told you that there will be a change of character, and this is where this is where gold will come to buy from. Because through this, gold is just buying. It has no business not buying. It is just buying, buying, buying. So those who followed, actually you can even use this now as everything you need to know about gold. I had done a top-down analysis on it, so this becomes easier because I don't have to go back. This is the change of character we were waiting for. And you see it has happened in 30 minutes, but I was actually waiting for it in 15 minutes. All this you are seeing here is liquidity. Liquidity, 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 liquidity. So what you can do, you can come and take this trading range. This is gold now. Come and take this trading range from there to there. What does this tell you? We're in the discounted price, and it has changed character. So the overall is bearish to some extent. Don't just say you're bearish and then target 50 pips or 200 pips. So we are bearish in 30 minutes. So we expect that this market will do what? It will come, retest to an area, and then continue to sell. Okay? So what you need to do first is ask yourself, where is the liquidity? Where is the liquidity? How do you know that? do a line chart, and then this is our BOS here. That's our BOS there. So we said when the market breaks structure, retraces, breaks structure again, this high is always liquidity. So this is our liquidity. I'm telling you, the moment you understand these things, it even becomes easier for you to look for setups. It becomes very easy. So though all this area here is the premium price, but we need to understand where in the premium price will the market be selling. So we need to look at the POI above this liquidity. POI above this liquidity. POI above this liquidity. So let us do a retro of order flow here. And you know, gold is a little bit crazy, but it is the same thing. Let's make it white. So let us do a little bit of order flow here. This was our order block. Okay, this order block was retested by this. This was retested by this. This was retested by this one. So from here, this area here becomes our point of interest. You see that area here, because this area was only retested at the base. It was only retested at the base. Another thing for you to know is that all this is liquidity and it will be taken out. Okay, that liquidity will be taken out. That means the most probable place to look for a retest is using this breaker block here. You see that breaker block here. So what do? We want to refine this breaker block. This is like how many pips? Okay, so we want to refine this breaker block. Very crazy. This is how these things are. This is how these things are. So we want to refine this breaker block here. So what do? We go to the 15 minutes. So what do we see in the 15 minutes? This breaker block was retested by this one. So we now refine to this area here. If you see something like this, just put this one where this wick is, so that we continue to refine. You see that one here, and this is conference here because we still have liquidity that has not been swept. We have liquidity that has not been swept yet. So what do? We go to 5 minutes. I'm telling you, no matter how volatile this thing is, it has to respect this thing. What can you see here? Can you see this order block? There is another block there. There is another block there. What is in the 3 minutes? 3 minutes, 3 minutes, 3 minutes. So in the 3 minutes we see the two things. We have a Canada block here and another one here. But if you are that serious, I don't know how serious you are, but if you are that serious, you can see that this swing high here is this one here. This is liquidity. This is liquidity. But because this is gold, I would give you this as my signal, because the gold has a lot of wicking. weeks. Gold has a lot of weeks. You see? So I'm thinking you just refine it to that order block there, like that. That's okay. This is in 30 minutes. So we expect that this is where the market will, and let me tell you, if you try to chase, okay, we will look at this buy because this buy is just starting, so you can benefit from this buy. Definitely you can benefit from it. So this is what we'll be looking at in gold. And that will be the ultimate sell. So if you are crazy like me, you can hold it up to there. That is where we have the last liquidity. You can see this is at a 1:27 risk to reward. This will be a move to reckon with. That will be a move to reckon with. So you can wait for that until it gets there. But let me give you this move now. This move that is moving up here. So we have a BB here. No, this is another block, sorry. We have another block there. So this is a POI. This order block was retested. Can you see this? It was retested. So the same concept. So this was the highest high. So we start from there. We want to see this market break that structure, retrace, break structure again, and then we will be looking at the buys from this area. This tells you that if you are looking for this buy, this is an inducement. Okay, this is an inducement, because if you look at this is 30 minutes. So actually let's do this in 15 minutes. Let's do this in the 15 minutes time frame. So you see we have another block here, this one, a breaker block, this one. So the market came, broke structure here. This was the last week up, broke structure here, it retraced. Okay, you see this retracement, then broke structure again. What does that tell you? That tells you that this is liquidity. It tells you that this is liquidity, and that liquidity will be taken out. So we have to look for a POI that is below this liquidity. Below this liquidity. So let's see whether we'll have something here. Go to the 15 minutes. Alright, I can see something here. I can see this breaker block here. You see that this breaker block, and it is in our QML level, because this is the QML. This is our QML level. So in our QML level, this is what we are looking at. You see this one, the last buy before that sell. That is what we are looking at. And then what else can you see? There is FVG here. FVG is enough conference. There is FVG. We have FVG there. So how should you trade this? How should you trade this? So we need to look at something that is below this liquidity. Something that is below that. Oh God, what have I done now? Below what? That liquidity. So what do? We move to the 3 minutes time frame. So in the 3 minutes time frame, our FVG is still there. Our FVG is still there. Can you see our FVG? And then we have what? We have something here. We have a breaker block there, which is still around our QML level. Still around our QML level. And for me, that is where I can take that trade. Yeah, what we do with gold, you give it space because of the wicks. So my friend, if you want to take this trade tomorrow, no, on Monday, this is where you take that trade. You see exactly where that is. That is where you go long. That is where you go long, like that. Where do you target? You target the next liquidity, and that is where the liquidity is. That is a 1:27 risk to reward ratio. A 1:27. Can you see all the liquidity I had marked? I wish I can show you. Those who are in the group, I'm sure you. I sent this setup and then someone said, no, it cannot do that. It cannot do that, blah, 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 blah. But I had sent this setup in the group. I had sent that setup in the group and it will happen. So that is where you wait for that. That is where you wait for that. Oh, our time is really far much spent. So if you allow me, we can do the UJ tomorrow. Let me just go through it, baby. So gold, you have a setup. My gold guy, you have a setup. You have to milk tomorrow. If you don't make money tomorrow, it is because you don't want money. So this is, someone is asking me about the challenge. Before I go to the next setup, let me just show you what we are doing. All right. So if you can be able to see this one here, this is what we are doing. We have taken a challenge with mostly beginner traders and some are intermediate traders, because most traders are drawdowning their accounts. So we took a discipline challenge and here it is, and our goal is to withdraw $300 before Christmas. Now we are using a prop firm account. So what we do is that you will pay $59. You will pay $59, and this is good, you just follow. You pay $59. This is the fee for that facilitation, and in this $59 I will buy a pro firm account for you, and this is how the pro firm account is. Once I buy the account for you, you will go through the challenge for free. Okay, you will go through the challenge for free. You only buy the prop firm account yourself once you pass the challenge. So let me give you an example. Let's say we are buying because this is the 5,000 pro farm account. You buy the pro farm account, maybe they sell it at, let's say, $50. So once you pass the account, that is the only time you will pay $50, and that is aside my facilitation fee. Okay, my facilitation fee is to make sure that you pass the pro farm account step by step until you get a $300 payout. So just follow this so that you understand before you commit. So I buy the account for you. The initial payment is about $5, so that one is included in my fee. I buy the account for you, and then we go through the evaluation phase together, because I already have my account also. I'll start with you. So how I trade is the way you will trade. Once you pass, or once we pass the evaluation, you now buy the account for yourself, and that account costs about $48, the 5,000 account. And I'm not trading for you. You have everything to do with your account. So I'll just guide you on how to buy the account in the initial stages. After that, it is our work, it is my work now to guide you until you pass the evaluation, and then you buy that account. It is a $5,000 account, and you buy it at around the actual price is $78, but they give you a discount of about $45. So you'll buy it for like $48. So I hope that is well understood. Well understood. Our goal is to be funded by November. So we have like 2 weeks now. That is why if you've not joined that allied group, you are already late. If you check that group, I don't know how I can show you my okay, all right. So I want to hide other charts there. Can you see that group there? This is the group I'm talking about. We are not many, because I wanted to filter out jokers. Forex has a lot of jokers. So if you check in the group here, I don't know whether there is a way I can make this one big. Yeah, perfect. If you look at this group here, we have already started we've already started buying the accounts. Can you see? So I've already started buying the accounts for people. All these are accounts we've bought. All these are accounts, and then we will guide you on how to do everything. This is the sell limit we are waiting for on Monday. So can you see, this is the group. It has only 15 members now, minus the people that assist me, and that we are like about 12 of us. The goal is to cash out money before Christmas, and you own that account, so you are not giving me the account, so you are in control of the account. You are in control of that account. So there is no way I can mess around with your money. There is no way. So I think that is understood, Fianza, and anyone else that was following. That is understood. That is the whole essence of that group. But I have a group, a free group that I set setups every, not setups, sorry, we do classes twice per week, twice every week. It is free of charge. You are not charged anything. Free of charge. I'll teach you what others avoid teaching. Yeah. So allow me kindly to close there. Allow me to close there. Okay, I'll just give a few tips on UJ because of my friend who asked. And the tip I'll give you is that if GBP is selling, USDJPY is buying. So let me just give you a small overview of what is happening. Just a small overview. Monthly we are buying. You can see there's a BOS here. So monthly we are buying. What about weekly? Let's see what is happening. Weekly we are still buying, but look at this. All this is inducement and it will be taken out because our move, let me show you something, because you're supposed to take your gun box from that point to this point. So that tells you that our main order block in the weekly time frame is here. Everything else happening here is inducement. Everything else happening here is inducement. So what do we have in the daily time frame? What do we have in the daily time frame? Okay, how comes it? Okay, perfect. So this is our daily time frame. This is our daily time frame. This is liquidity. All this is liquidity. All that is liquidity. So what we have in the daily time frame is that we have a trading range that is from that high to this low here. That high, okay, yeah, that high to that low. Good. That high to that low. So this market must come here to get our main move, the move that will break this structure. So these ones must be taken out so we can get our order block from there, because that is the QML level. Okay, if you look at this, you see that is our QML level. So if you spot liquidity in the daily time frame, you see these are relative equal lows, and kunale supported resistance, they call this support, but this support will be taken out eventually. Eventually it will be taken out, and looks like it can be this week. You see, UJ really dealt with people last week because of this gap here. Because of this gap. Because markets never trade either either bullish or bearish without a what? Without filling this gap. You see that gap there? So what I would do if I were you, I would come and mark this, that one. What is happening here? Just a second. This is USDJPY. So look at this. What I do is to mark that thing here and then wait for the market to come at my QML. Which I believe this sell is already happening from the QML. This one. So what do? Look for any liquidity that is somewhere here. If there is none, because I cannot see any, wait for this market to come here. Are you following? Mtu wa Geo, wa UJ? Wait for that market to come, enter with the retest, and then you can target this this liquidity here. But even if you target the head of this gap here, you will not be taken out, because the ultimate, this sell is coming up to around this place where we have the support. So you can use that as a signal. Enter with the retest, and then you can target just this low there. But this is the most probable one. You see, we have a lot of trade line liquidity here. All this is trade line liquidity. So even if you target this swing low here, you are still safe. But that is if you swing trade, because this might take a little longer. So I think with that, we can call it a night. If you want to join the Elite group, WhatsApp me on the number on the screen. If you still want to join the other group, you still can WhatsApp me. I'll add you in any of the group that you want. And then that is that. So have a good night.